Good afternoon, traders. This is Trader Tim from eMoneyMind.com. Today is Monday, March 27th, 2017. Doing a look at the markets and the week ahead. Tomorrow we'll be doing live trading. Tuesday, you can check that out, eMoneyMind.com/VIP. As we start our analysis looking at the E-mini S&P, last week, we were talking about the two scenarios as we were sitting inside of the triangle, the descending triangle. And the first scenario being breaking out above, and then the second, which happened, is breaking down below. And those two lines in the sand then act as a strong resistance level. So I'll remove the fib that I have drawn up here. We'll get to that in a second. So now that we've broken down below the 2350 level, and that was a big level for us in that we kind of sat on top of it back here. We held below it, then we sat on top of it. It was already proving to be support. We pulled back to it once, then twice, and then once we broke through it, we retested it, and it then acted as resistance. So a very strong horizontal support. I'm going to get rid of the descending trend line that I have since we broke to the downside. Now today, if we were to kind of come back a little bit and looking at the Fibonacci retracement from back in January, that entry to highs, like so, gave us a little off, 1 day off, move it over 1. There we go. And this is trading hours only, that 50% had a test last week. We got the initial bounce off of that level, traded up to the 2350 level, and then sold off. And then today's trading, we gapped down, holding the 61.8, and then rallying into the close. So what can we deduce from today's price action? Well, the market's not, the bottom's not falling out, even with the United States Congress pulling the plug on the healthcare bill. So even with a lot of shakiness in the news front from the U.S. presidential realm, there's still buyers coming in, seeing this as a good opportunity to get long in the markets. And as the saying goes, buying on rumor, selling on the news, that's a very strong sentiment that has held through, as far back as markets. The markets have been around. In the principle being buy on the rumor when there's a new product that's potentially coming out. The rumor in this recent rally is of U.S. President Trump doing all these great things. The ideas, the potential. And so from the November election, that rumor of all these great things that were promised is what drives the market higher. And then when the actual news comes out, in that being, well, this didn't get done or this did get done. We have a new iPhone coming out in the case of Apple, let's say, and or a new product that Apple's rolling out, and that excitement and that rumor drives up the price. And then when the news comes out, sometimes it is not what was expected. Same thing goes for earnings. Economists might expect Amazon to beat estimates by a certain percentage, and they may beat estimates, but not by a high enough percentage that the economists thought. Thus, the stock goes down. So buy on rumor, sell on news has always been a solid principle for trading stocks, trading the futures markets. Just kind of a good little rule of thumb, especially when you start seeing a lot of bearish headlines in the newspapers, on CNBC, a lot of people talking about recessions and that sort of thing. That's typically a good time to buy. When people are talking about top in the markets, that's typically, or that the markets can they just keep going up and keep going up, and we're in this great economic boom. That's usually a safe time to sell. This week in economic news front, tomorrow we got consumer confidence, after the bell, Thursday GDP, Friday consumer sentiment. So the last couple of weeks have had a fair bit of news it's been market movers. This morning in the ES, we're starting to see some good price action returning. The last couple of weeks have just been downright ugly, and not a lot of setups. A real challenging market to trade intraday. So good to see now as we started off today, from lows to highs, the market pulling back, not getting all the way to the 50, but if you get into a situation where you miss the entry, because even if you rounded up and added a tick, a 2350, I mean, the market did touch 2350, but you don't always get those fills. We call that a magic fill, when the market comes down and fills you, but actually doesn't trade through your price. But you can just wait till the next swing high is broken. That being this high over here broke the previous swing high. And then you can just take the low, most recent low to high, get in on the pullback, and then ride it up. And you can either trail swing lows or get out at the 23, the negative 23% retracement, and then take the next setup from the 50 up to the negative 23% retracement, and then get out there. And then even into the afternoon, the market's been looking really good. Swing low to swing high, market pulls back, touches the 50, and starts to rally. When we get into situations like this, where the market breaks the previous swing high, you can start trailing each candle if you like, especially if the distance from the 50 to the negative 23 is fairly large, meaning you don't want to give back 3-4 points on a retracement, especially after the market has moved up higher. When we're back close to the beginning of the trend down here, trailing each swing low is a good way to stay in the trend a little bit longer without getting in, getting out, and having to get in again and get out again. But as we get further along, after we've had 1, 2, 3, 4, 5 setups in a row, the likelihood that the market's going to continue higher continues to decrease. So if you want to get a little more aggressive after the market has run in one direction, once we break out of the previous swing high, in this case right here, you can then just bring your stop up underneath each candle's low, and then get stopped out up here. And in some cases, the market can break the high and get a strong rip really quick. And so by trailing each candle's lows, you lock in profits really quickly. And then if the market does pull back and retrace, you're out of the trade, and then you can decide if you want to get back in for the next move or call it a day. So as we get later into the afternoon, the markets can get a little bit boring at times, or slow before going into the close. So pretty good looking ES as we head into the week. If we take a quick look at the top line figures to wrap up, Volatility still low, in the low teens. Come on, profit charts. Looking at the volume, with the big bearish candle, we now have sort of a bear flag setting up, where we sold off and then we move sideways. Today's price action, we'll really need to see if we break today's high on the next tomorrow, or if we put an inside day tomorrow, then we have a greater chance of declining on Wednesday. Dow, pretty much same scenario. NASDAQ, a little bit clearer bear flag, bearish candle, and then the sideways price action on nothing special with the volume. And then the Russell, sort of leading the market here because the Russell did not make a new high. Instead, it made a lower high, and it sold off a little bit more and earlier. If we look at these lows back here and compare that to the S&P, the S&P is still much higher than these previous lows from the beginning of the year in January. So, expecting some good trading opportunities to resume now that we're out of this sideways, almost holding period that when we were leading up to the FOMC announcement. We can expect some better trading opportunities ahead, and these big body candle days, now that we're out of the consolidation, can yield some really good trading opportunities. So with that, we'll call it a wrap for today, and we'll talk to you tomorrow morning. You can check that out, eminimind.com/VIP. And as always, feel free to shoot me a note, tim@eminimind.com.